Welcome, everyone. We'll get started here in just a second. I am Mark Trice, founder and lead advisor at Clear Vista Financial. Boy, this was a week, but it was a wonderful example of our democratic system at work, and the American people have made their decision. And tonight we'll have a brief presentation about the results, this week's election, where they kind of stand right now. There's still a few races that are outstanding, and how that makeup in Washington might affect our portfolios. So regardless of how you voted, the plan is to put politics aside and dive into the data. There are so many factors beyond politics that are critical to understanding our economy right now. And so I hope that you can learn something tonight that might be useful. I'm going to go ahead. I'll leave the camera on tonight, but actually I'll turn it off so that you can read all the slides and things. Bear with me. Okay. There we go. So what all happened? Well, there was a surprise. This is the digital front page of the Wall Street Journal on Wednesday morning, showing the news that we have been waiting for months or even years to see, depending on if your candidate won or lost. Of course, we all know that Donald Trump beat Kamala Harris, and by today's total, this is actually a little bit dated, Trump has 295 electoral votes to Harris's 226. And for those of you that are wondering, the last president to reclaim the White House after losing it was Grover Cleveland, all the way back in 1893. So he was the 22nd and 24th president. So about 40% of voters said the economy was their top issue, far outstripping any other issue, and those particular voters favored Donald Trump by 60% to 38% for Harris. Many weren't thinking about the streak of robust economic growth or the Federal Reserve's potential soft landing when they voted, but their grocery bills and out-of-reach ambitions for Americans are still feeling the sticker shock on higher prices on everything from cleaning supplies to a cup of coffee that followed the pandemic. Their anger about the economy extended beyond prices to encompass a wider discontent and anxiety over the future. And many Americans are frustrated they can't afford to buy a home or start a family. And even fewer believe that the American dream, which so many of us have experienced and have been able to fulfill in our lives, is achievable. So we're still awaiting the results of the House of Representatives, but the Republicans have won a majority in the Senate, and we just got another update this afternoon, and this has actually changed. The Republicans now have 53 senators in the Republican side compared to 45 for the Democrats. There are still two Senate races that are still outstanding in Arizona and Nevada, but we suspect that maybe here in the next couple of days, Nevada's almost done, but Arizona has still got quite a few votes to count. And as we know, you probably heard here in Texas, Republican incumbent Ted Cruz won 53% of the votes over Democrat Colin Allred. What about the House? Well, this has actually been updated this afternoon as well. And here's a map of that. The House of Representatives is that lower chamber of the Congress, where each state has a proportionate amount of members relative to their populations, and members of the House serve 2-year terms. At 4:30 this afternoon, the Republican number was up to 210, and the Democrat number was up to 198. I still think there's probably another 20 or so votes that are seats that need to be filled, and those votes are still counting. I know in Arizona there was at least 3 that they hadn't certified just yet. So California is one of those as well. They're notorious for taking a very long time to count all the ballots for their House vote. So we have been preparing for about 6 different scenarios in when it comes to government and the policies that might be implemented depending on who won. We'll look at 2 different options here because we still don't know whether or not the Republicans will sweep the White House and each House of Congress, or each chamber of commerce, or will the Democrats gain control of the House of Representatives? We know that the Republicans have the Senate and the White House. So if it's a Republican sweep, here's what we think. We think we'll have a temporary extension of tax cuts that were enacted in 2017, but Trump's position is hopefully that he'll be able to lower the tax rate on corporate profits and some modest targeted tax relief for workers who earn tips. This is one of his campaign promises. But because of budget rules, and we'll get into this a little bit more detail so that you know, I know a lot of folks are afraid that Trump will do dictatorial things and with the government. We're going to show you what he can and can't do without legislative approval in just a few moments. But because of those budget rules, the only way to permanently extend the tax cuts is to make major cuts to spending and the bureaucracy. That's one of the things that supposedly Elon Musk was going to help with. I don't know. But that's part of the budgeting rule. You can't make major tax cuts permanent unless you also cut spending as well. Novel concept, reduce spending if you want to reduce the income coming into Congress. So it really seems clear to me that the massive government growth in the past 2 decades should be reversed. But it remains to be seen whether Republicans are really even serious about it. I don't recall, and maybe you did, I don't recall anyone on the campaign trail talking about how we needed to reduce deficits. So, things are still out there where we got a problem with debt. And we'll talk about that in a minute. So we expect a reduction in the green energy subsidies and a focus on reforming Medicaid. That's Medicaid, not Medicare. But without legislation, President Trump could be able to raise tariffs, particularly on China. And he could also, with executive powers, substantially reduce net immigration flows into the U.S. But what if it's a Trump White House, a Republican Senate, and a Democratic House? I still think that you'll get a temporary extension of those Tax Cuts and Jobs Act of 2017 tax cuts, but only after the GOP shows a willingness to negotiate and make concessions, including letting the top tax rate go back up to 39.6. That's one of the key issues and promises of the Democratic Party in this election is they want to raise taxes on the rich, which is not really that rich when you think about it. But and also raising the limit on state and local tax deduction. That affected a lot of Democratic states. So that right now it's capped at $10,000. That's going to be raised potentially. This is the Democrat Party's hope to 20 to 25,000 instead. And that would be, those compromises would be the political price to get some Democratic House members to vote for an extension on the Tax Cuts and Jobs Act. Otherwise, the Tax Cut and Jobs Act will sunset at the end of 2025. Trump will probably still be able to raise tariffs and reduce net immigration flows because no congressional action is required. In addition, in this scenario, Trump would try to resurrect the presidential power of impoundment. Now, this is a power to cut discretionary spending without congressional approval. Now, it's important to remember that discretionary spending has nothing to do with defense, Medicare, and Social Security. Those are non-discretionary spending. And so those things would not be impacted by this impoundment procedure that was used by the president. And it hasn't really been used since the early 1970s. And there was a law passed in 1974 under Nixon to eliminate the impoundment privilege that the president has. It's ineffective and it can only be eliminated by a constitutional amendment, not a regular law. So he's going to try to probably challenge that if necessary. Let's see here. So what does that mean to the markets? Now, there's lots of opinions about these things, but here's a chart showing the annual performance of the S&P 500 stock index, given the makeup of in Washington going back to 1949. The data shows a split Congress leads to higher index and performance. Isn't that something? A split Congress leads to higher market performance. Now, I don't think that's a causation. I just think that that means that investors in Wall Street are more certain that there's not going to be any major changes, legislative or policy changes, when the two parties in the chambers of the Congress are opposed to one another. In other words, roadblocks or things move slowly. So it really shouldn't be used as a predictor for the next 4 years for the S&P, but it does show that having a split Congress can provide less of a roadblock to the stock market than we expect. So kind of interesting here to look at these two comparisons. So this, I wanted to show this. We did this in a pre-election webinar we did a few weeks ago, an event. The midpoint in the chart, right in the middle here where the red line and the blue line come together, the zero line there on the bottom axis, is the election day returns for the S&P. The red line is the Republican average, and the blue line is the Democratic average. And you can see generally they both go up. What happened the day after the election? Market gapped open and shot up. Actually, it was a lot of high frequency traders that took advantage of people and the euphoria, but that trend has continued up slightly even today. So, we're hitting, the indexes are hitting some all-time highs, where other indexes are still trying to recover from the decline in 2022. Historically, a Republican president-elect does not see the drawdowns of a Democrat president-elect, but they even out after about 60 days. We still expect significant volatility in the remaining weeks of the year. Trump's victory does not ensure any future returns in the stock market, despite the excitement and jump in prices the last couple of days. Okay? That's important to remember. You don't make your investment decisions based on politics. Here's a couple other things. This drills down on the 11 sectors of the economy. Some of our clients know that we talk about this quite a bit, but it can show you the first year of a 4-year presidential term. So we go back to 93. That was Clinton. 97, second term of Clinton. 2001, that's first term of Bush. 2005, you can see here, look at that when all three houses were in charge. A lot of the sectors went down. Same thing in 2017, 2021, we had good returns. So this kind of some figures in here that are kind of interesting. They're not indicative of future performance at all. In 2005, we saw an index. Excuse me, go back here. Didn't mean to jump ahead. In 2005, we saw a sweep of each chamber in the White House, and we saw energy really take off 31% in the following 12 months. 2017 was a bullish year under Trump and with tech leading the way. So this is just historical data. It's not really indicative of what will happen in the future. So generally what we've seen, and this is what the research is showing, this is coming from First Trust and Bloomberg, since 1980, the 6 months following a presidential election have favored value stocks over growth stocks by 3.5%. Now, this is just historical information. Growth underperformed over each time frame studied in this chart. So that's just interesting. We may have, and that probably is because we're waiting for the new administration to implement policies and things. But given the current environment of domination by mega cap growth stocks, it'll be interesting to see if the next 6 months follows this pattern or not. But we'll keep an eye on that. So let's cover a high-level summary of the policy priorities listed here. Several of these were important to voters, and we went and researched both presidential candidates' policy statements to see what they were promising. And it was interesting, and I didn't quite know what it meant, but as they were doing exit polls on Tuesday evening, the most important issue to voters was actually the state of democracy. Now, they didn't really explain that, and I don't think they really can use that in the way that they think, but I'm sure that on both sides of whoever you voted for, that probably means something different to you. So it's just really interesting, and that was the number one exit poll answer of people leaving the polls on Tuesday. Doesn't matter. They don't really do a lot of exit polling sometimes with early voting, but that was just yesterday. So the main policy and priorities, taxes, keeping them the same or even lowering corporate tax rates. World trade. Trump has talked many times about tariffs, and we'll talk about that in a minute. Regulatory, eliminating um, regulations that are not needed. Healthcare, energy, defense, technology, industrials, and then finally immigration. Now, I failed to mention when we started, if you want to text a question in while we're on the program, you can send us a text to 254 282 0495, 254 282 0495. And I'm going to break down each of these priorities as it relates to taxes. What you're seeing here is three columns over here. Executive action requires means that Trump can do this by just executive order. And then also two, the second column is where Trump and the Trump administration would have to have legislative support in order for that to happen. So a lot of things that people have been saying they're afraid of are going to happen. They really can't do that unless they have support from Congress. So reducing the corporate tax rate, you've got to have Congress vote on that. If the House of Representatives is evenly split or close to being evenly split, that may be difficult to achieve. Permanently extend we talked about this, the capital depreciation rules in the 2017 Tax Cuts and Jobs Act. That requires legislative action. As far as individual taxes, permanently extending the tax rates from that act back in 2017, it's got to have legislative action. That's why I think it's more likely that they will temporarily extend, maybe till 2028, those tax cuts that we're enjoying now. As far as trade and regulatory environment, now Trump has threatened to impose a 60% tariff on goods from China. Now, this was something he did impose tariffs on Chinese goods, a certain amount of goods, of 10% when he was in White House before. Biden did not change that, so that's still in place. So this is an addition to the 10% on a certain basket of goods coming from China. And there was a phone call today from President Xi in China to President-elect Trump, and congratulating him on his win, but also kind of warning him that that would not be good for U.S.-Chinese relationships. Of course, China doesn't want more tariffs because that would impact their gross domestic product and saying things like that. But I do think there's a number of different things when it comes to trade that Trump can do, but based on his previous term that he had, he mainly uses it to rattle the sabers and to scare people to compromise because the Chinese don't want huge tariffs, so they're going to come to the table and negotiate. I think the big thing in his first term was really about technology and the Chinese stealing American technologies, and there were some strides that were made there with that. So you can see some of these things when it comes to trade and regulatory environment there. Now, when it comes to, oops, I skipped ahead too fast. When it comes to the Federal Reserve, changing the Fed's political independence, I don't think that will happen. The Federal Reserve today, they made an announcement that they lowered interest rates by a quarter point. That is trying to stimulate the economy more. And there was a question asked to Federal Reserve Chairman Jerome Powell when he basically said, he was asked, will you step down if the president asks you to? And Chairman Powell said, frankly, he just said, no, I won't, even though he was appointed by the Trump administration. So a lot of things here that can be done, but still require legislative approval. When it comes to technology, Trump has been talking about putting pressure on social media companies about free speech. There was a lot of admission in this election cycle that they were trying to manipulate things in 2020. I think that'll be one of his priorities. And there probably will be a little less spending on public transit, pollution control, and things of that nature. There has been talk that he's going to increase the deportation of undocumented individuals. From what I've seen so far, it's really trying to get the ones that have been committing criminal acts that are undocumented to get those folks out first. And then he'll probably put back into his immigration policy that he had when he was in and during his first term. Okay, so neither candidate had explicit plans to bring down government spending, as I mentioned before, or the gross federal debt. And Trump has hinted at giving it a shot with folks like Elon Musk if he appoints him to some task force or a cabinet thing or other dedicated leaders. But we believe that dramatic spending cuts are needed. This is a chart from the Federal Reserve Economic Data, the St. Louis Fed, and it shows gross federal debt as a percentage of gross domestic product. That number is currently over 100%, close to 120%. For illustration, so let's imagine that you're a working person making $100,000 a year. To match the United States currently, that would mean you are carrying about $120,000 in revolving consumer debt. And that's not far off considering the actual federal debt is about $103,000 per person in the US. In 2012, it was only about $49,000 per person in the US. And in addition to this, the US creditworthiness is already on a hair trigger as the debt pileup has reached astronomical levels. The entire purpose of this wild spending has been to balloon the gross domestic product as much as possible to prevent a recession from being declared already. The debt to GDP level is now higher than it was in World War II, and it's getting worse every day. We think this is one of the most important issues facing the new Trump administration. Unfortunately, these kinds of problems are very difficult to solve with just policies and politics. So this will continue to be a problem for us. And I don't know why we did this, but the Treasury Department during the Biden administration had a lot of 30-year debt come due, and they refinanced it, not at the low rates that were out there a few years ago, but at short-term rates, which renew every couple of years. And so they're going to refinance that debt again at much higher rates than they could have a few years ago. I can't remember the percentage number, but our percentage number of interest payments to GDP is rather large. Okay, so this is something that we looked at because everybody focuses in the media on gross domestic product, okay? And gross domestic product has been rather timid the last few years. And you can see here the blue line is that real GDP, and there is a zero line there. I forgot to add that to the slides, but there is a zero line there, and you can see the blue line is above that. But that's what GDP measures is consumption. Americans have been still consuming as a result of all the stimulus that was getting out and been given out, and they continue to do so, even though that might mean more household individual debt. The yellow line here is a measure of production, and this is gross output. So if GDP is a measure of consumption, gross output is a measure of production. And what you can see over the last few years is we've actually, didn't mean to do that, we've actually been negative. We've been shrinking in output. And that really is a mild indicator that maybe, I think what's going to happen the next couple of years is they're going to go back and revise all the economic data, and they will come back and say, oh, we've been in a recession since 2022. That may seem kind of crazy to some folks, but that's what the data is showing here is when production is slowing down, productivity is falling, and that's not good for the economy. Now, here's one. If we look at that gross output, annualized, that percent change, and then we take out of the GDP figure all the government spending, okay? And what you can see here since 2021, the middle of 2021, that real GDP for the private sector minus government spending has been negative. And it's still negative. It was briefly positive in 2023, and then now it's negative again. So that's telling you that government has been supporting our economy, trying to pump money into the economy to keep it afloat. And so this is that, looking at that, the gross output's in yellow again, the real private gross output minus the real private GDP. And that's without the government stimulus or government money. It's been negative. All right. And so those are things that tell me that the economy is slowing down quite a bit. This is another one. We believe that the U.S. is going back to that output, that production. We believe the U.S. has been in a production recession for really the last 2.5 years. Now, the actual definition of recession uses that gross domestic product, which we said is a measure of consumption rather than production. Not to mention the fact that technically we did have 2 consecutive quarters of negative GDP growth, but the Biden administration decided it doesn't count this time because this time is different. This chart shows the ISM Manufacturing Index, which measures whether manufacturing and the economy as a whole are expanding or contracting. Levels that are below 50 or above 50 indicate expansion. Levels that are below 50 indicate contraction. And we've been contracting since the beginning of 2022. This information I'm showing you does not align with what GDP data is showing us over the last few years. So, new administration, old administration, if you will, and a lot of changes that are coming in place. We won't know how that output will look until they finish counting the last few 20 or so congressional races around the country. Right now, the Republicans have a slight lead on the Democrats, but I suspect it'll be very close as what it has been before. In the House, you need 218 seats to maintain control or get control of the House, and that will be really important. But we have seen situations in the past where one party dominated the White House and both chambers of Congress, and really, oftentimes, that didn't really accomplish much of anything. I think what's important and why we've had the euphoria of the elections, post-election rallies in the market is because at least one thing has been determined. They know who's going to be in the White House. So with that, I want to say thank you. Let me just see if there's any questions on the board right now. And I don't see any today, but you can always still text us at that 254-282-0495, 254-282-0495, and we will give you a call back or text you back. But thank you for participating today. You have a great evening, and as always, give our office a call if you have questions about anything at all. Thanks.